Hello, good morning. You've tuned into Trading Hour, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is Hormaz Patake as well. Hormaz, happy Friday, and surely a happy week coming in for the Indian markets at least. And today also we're managing to hold on to that green, broader end of the market, doing well. No complaining again.
No complaints, and has been the case over the last week or so. And 25,600 is where the Nifty currently is. It's a new high for the Nifty bank, and we are about 650 points away from Nifty's own record high of 26,277 of September of last year. So within 9 months, we've made lows, we've come back from those lows, and now we are heading back towards those record high levels. But it is the Nifty bank that is the one that has seen a new high in today's session. And the broader markets, which were underperforming yesterday, are the ones that are doing better in today's trading session. The mid-cap index up almost 400 points. The small-cap index too trading fairly okay for itself. The small-cap index did well yesterday. In yesterday's session as well, 0.7% higher today. So the HDB Financials IPO, that continues to see healthy subscription. The QIB portion fully subscribed just a few minutes earlier. The retail portion also now nearing that 80% mark. The overall figures too heading towards that 2 times mark now for HDB Financial, and that has had an effect on HDFC Bank as well. Mind you, the stock is trading ex-dividend in today's trading session. Made a record high yesterday, but has now managed to recover from the lows back above the mark of 2,000. But the big news of the morning was the confirmation of CNBC TV18's news break when AkzoNobel saw now that stock, now I pull up that stock as well. That stock was up 10% at one point, still holding on to gains of around 8%. And that is after it announced earlier this morning that JSW Paints is set to acquire the promoter stake in a deal worth over 9,000 crore rupees. The initial stake will be done at around 2,762 rupees a share. Remember, Parth Jindal of JSW Paints had told CNBC TV18 at the World Economic Forum in Davos in January this year that he would give it everything he has to acquire AkzoNobel. Listen in to what he had said.
I think there's no choice. If JSW and the ambitions we've shown that we want to be a top 3 player in whichever sector we play in, if I have to do that, then I have to give it everything that I've got for Akzo.
How will you fund it?
It's going to be a mix of the family investing, and private equity.
And that was Parth Jindal himself talking to us about the deals coming in. But Mangalam is joining in with us. And Mangalam, now that the deal is done, tell us, how has that changed the paint industry dynamics now? What are we watching out for?
Well, a couple of things. This paint industry has been extremely colourful when it comes to news flow over the last couple of years. In particular, JSW Paints, of course, having acquired AkzoNobel India, 74% of the promoter stake being acquired at 2,700 rupees per share, which is roughly 9,000 crores on a deal size. The stock is higher because they have also made an open offer, and that open offer is close to around 3,417 rupees per share. Importantly, what this basically does to the paint industry is something that we are tracking from here on itself. You look at the paint industry, look at all the top players in the paint industry as well, and look at AkzoNobel. AkzoNobel is the 4th largest paint company in India, and you would know it better as the makers of Dulux paints. Remember, 35% of their revenue comes in from industrial, and more importantly, they have been increasing their presence. While their market share in premium is more than the market share in popular, they've been at around 5,700 towns, and the 2-year target has been 8,000 towns. All of this before the acquisition was announced itself. So where they go from here is an important point. And talking about the paint industry, Asian Paints, 34,000 crores in terms of top line, sits heads and shoulders above everyone else. Berger at around 11,545, the 2nd largest player. This is the place where Birlas are eyeing market share as well. Kansai, AkzoNobel, and thereafter you have Indigo Paints. Come Birlas. In FY25, Birlas launched Birla Opus, and they reached high single-digit market share in the 4th quarter as per the company. So if you look at the paint industry and look at high single-digit market share, it implies that their run rate in the 4th quarter could have been anywhere between 900 to 1,200 crore rupees. What is their stated objective over the next 3 years? Since their entire completion, they are looking at revenue target of 10,000 crores and aim to break even as well. Birlas aren't the only conglomerates. We have JSW Group as well. X of this deal, we had JSW Paints, and Parth Jindal has said FY24 revenue in the paint business was 2,000 crores. They have an FY25 target of 3,000 crores and FY26 target of 5,000 crores. The only fly in the ointment, nearly 60% of their revenue comes in from captive sources. So organic growth is what something we'll be watching out for. The paint industry is an 80,000 crore industry, of which organized is 65,000 crores. Growth estimate 12 to 13%. And over the last 60 years, top two players have had more than 50% market share, and which is what keeps all these conglomerates excited about this opportunity. What is it that drives growth in the paint industry from here on? Not just capacity, but more importantly, distribution, brand, and at the same time, what do you have in terms of tinting machines for the dealers, and then eventually capacity? Do you have enough to produce for the market? What is it that the street is looking for as the dynamics of the industry have changed? Expansion plans of incumbents and disruptors, both. What do Asian Paints, Berger, Indigo Paints, who was also among the ones who were running in for AkzoNobel, do? What happens to the margins of the industry? Because we've seen margins compress as competition increases. Asian Paints and Berger has said that cost of sales have increased. And finally, from an investor standpoint, valuation multiples, they have derated. Asian Paints at peak was close to around 60, 62 times, now come down to around 40, 42 times itself. So that is something we'll be tracking. What does market share look like? Morgan Stanley had written, because of competition, the top 5 players will lose up to 300 basis points in market share. And the biggest loser of that would be Asian Paints. In fact, they expect Asian Paints to go ahead and lose up to 200 basis points of market share over the next 3 years because of increasing competition. Where does all of this put JSW Paints in? You'll have to look at growth with AkzoNobel and X group revenue, the organic group revenue that they do going forward. The second thing we'll be looking at, how much more will they have to invest in the strength of branding, capacity, as well as distribution. And finally, from a shareholder standpoint, they were talking about a JSW Paints IPO. Now, will they do the Paints IPO, or will they reverse merge JSW Paints into AkzoNobel itself or not, is something we'll be tracking very, very closely. Because of the disruption that we've seen in the industry, we've seen that impact on a lot of people's portfolios as well. Berger and Kansai are the only two stocks which are marginally in the green over the last 12 months, but all of these stocks are down anywhere between 20 to 33% from their 52-week high. And we spoke about valuation multiples derating, right? At peak, Asian Paints was over 60, now 41 times. Berger too was 50, 55, now 41 times. We have Indigo Paints, AkzoNobel, Kansai Nerolac, all of them between 32 to 39. So a lot happening in the paint industry, conglomerates eyeing it. So it's a colorful news, or an array of color when it comes to news in this space.
Well, lending the color to a sector that gives us colors to our homes. Mangalam, thank you for that. In fact, you'd done a very deep dive into the paint sector a couple of years earlier as well. And this one is the one that you need to watch out for after the JSW Paints consolidation. In fact, earlier we spoke to market experts of what they make of this deal, and more competition now in the paint sector. Listen to what they had to say.
Maybe this disruption, as you mentioned, is perhaps, one good indicator that, Indian consumption story is pretty much intact. Yes, there are new players entering, and, for any segment, when there are new players entering, there can be some sort of market share, grab kind of competitive activities which plays out, and which is pretty normal. Paint as a sector, as you mentioned earlier, I think consumption play is pretty much, the core story. We have a nice combination of whatever I say, house durable, the house paints going on, maybe infrastructure is improving. So paint is structurally a good story. Competitive intensity can decide a little bit shift of market shares or margins, profitability, etc. But that does get captured in market valuations.
It's a 15-16% discount to CMP. And this is even when your AkzoNobel was not trading at a premium to other players. So the pricing to that extent doesn't seem to be that high. That is one. The second, in terms of the industry dynamics, I think it's going to be the most fiercely competitive scenario than we have ever seen in the paints industry, because already we are witnessing a lot of competition coming from Birla Opus, and now AkzoNobel, which was I would say an MNC, but they actually never tried too hard to gain market share or do anything which is very extraordinary. Now with they falling into the hands of JSW Group, which is very aggressive, and on their own they have been making quite a lot of efforts. I think now it will become much more complicated in the entire paint industry.
That's the complete wrap of the turn of events of the morning with regards to JSW and Akzo Nobel and the entire paint sector as well. 7.75% higher still. Akzo Nobel still above that open offer price of 34.17. The Nifty gaining some momentum, 60 points higher now on the index, 160 higher on the Sensex as well. Take a short break. On the other side, all things commodities. Manisha Gupta. Welcome back. Time for commodities then, and all the action encapsulated by Manisha. As always, she's joining us to put the spotlight this time around on metals, Manisha.
Well, yes, and I want to put forth a point here because when you look at the month of June, and we still have a couple of days perhaps remaining, but one trend is very clear here, and that is that gold has underperformed within the precious metal as a sector and within industrial metals as a space as well. So I just wanted to quickly take you through those numbers right now. If you look at the gold prices, they've gained 1% for the month of June. But when you look at silver, we've gained by 11%. Platinum, palladium, also called as PGMs, have gained much higher. So while you have palladium trading up by nearly 20% for the month of June, platinum seems to be outperforming the precious metal sector with nearly 29% of gains just in the month of June for that matter. Now talk about the base metal prices or the industrial metals for that matter. And just let me remind you that gold is only gained 1%, but copper is gained up by 9%, aluminum is up 4.5%, and zinc prices have gained up by 3%. So we are looking at gold kind of underperforming. Couple of reasons for that. One, you've seen the money flowing into various other asset classes. As can be seen, a lot of money was pushing or pumping, getting in and out of crude oil as well. And then equity markets have done slightly better too. The other thing is the dollar index decline, and even with that, we haven't seen money come in for this one, but the other commodities where you have actual use cases kind of do better. The street also believes that a couple of rate cuts from the US Fed already are baked into the prices. So while we may not be looking at 3,500 coming back in a jiffy, but we do not see the gold prices trading below 3,100 anytime soon. So that's the kind of range that we've seen come in for the gold prices. While the US Fed is still awaited, you have seen various banks like China, India, Brazil for that matter, Swiss National Bank, Bank of England, Eurozone, all of those cut interest rates. US is yet to done that, and that is something that the gold will keep an eye on. If there is a statement that brings gold out of its comfort zone, that is when you will see the gold prices gain. Otherwise, markets feel that with everything that is happening, is already baked in case of gold prices. It's going to be a range-bound goal, but the opportunity absolutely seems to be coming in for the other metals.
Okay, Manisha, thank you so much for that, and thank you for giving us the latest update coming in the world of commodities, keeping the spotlight on metals today. But on that note, we're going to slip into a very short break. When we return, we'll discuss market technicals with Mitesh Thakkar and also his top trading bets. Welcome back to Trading Hour on CNBC-TV18. As of now, the Nifty is at 25,600 levels, almost near the day's highest point is what the Nifty 50 is trading at. On that note, let's shift focus to some of these individual stocks that are in focus today. And first up, we'll start with Petronet LNG. That's in focus on the back of a brokerage note coming in from ICICI Securities. They've upgraded the stock this time from a sell to a buy call. Now, they've also raised their target price. What more are the details for this? Why are they positive on the stock? We have Sonal joining in with us. Sonal, welcome back, and great to see you here again. You're shining bright as well. And so is your sector, Petronet LNG.
Oh, it is. And thank you. It's lovely to be back as well. And what better to talk about the sectors which are buzzing in trade. Petronet LNG, that is stock in focus today. There is an interesting note coming in from ICICI Securities. As you said, the stock has been upgraded to an add from a sell. There are a couple of reasons why they like the stock. They met the management and they think the prospects for the company for FY26 to FY28 are great because of three reasons. One, LNG prices are expected to moderate. There is expansion at their Dahej terminal that will happen by first half of FY26, and the completion of the Kochi-Bengaluru pipeline that will happen in this calendar year itself. There are concerns, of course, around the return ratios from the Petchem project and also the visibility on the Gopalpur terminal. That is something that they are watching out for. However, they have revised estimates to factor in 7% EPS CAGR over the next few financial years, and on the back of that, they have upgraded the stock to an add from a sell and raised the target price to 330 from 250 earlier.
Upgrades on the stock, upgrades in life. Sonal, thank you. And welcome back as well. And since we are in the Ek Se Hamara Kya Hoga phase, tell us more about GAIL as well for a note from Jefferies.
Oh, yes. So GAIL is well in focus. You remember, GAIL is always in focus whenever there are revision in tariffs. And there is one tariff which is expected to come in from the PNGRB, which is the unified tariff. A board meet is expected to come by very soon. And that is where Jefferies says it could be a game changer for GAIL. Remember, GAIL had filed for 33% increase in unified tariffs to around 78 rupees per MMBTU. While Jefferies expects a 10% hike, GAIL expects it to be around 20% because there has been a reduction in the capacity of the unified pipeline by 6%. So if there's a 10% tariff hike, it could increase their EBITDA by 13%. If it's 20%, their EBITDA could increase by 26%. That is for the transmission segment itself. The return on capital employed, that would improve to 10 to 12% on calculated basis from the 8% mark currently. And if this actually happens the way GAIL has requested it to be, it could lead to a 34% hike in their target price as well. They maintain a buy rating on the stock, but this will be the key thing to watch out for GAIL going forward.
Okay, surely keeping an eye out on GAIL as well. Thank you so much for that, Sonal. But let's focus and talk about the pharma pack. We have Torrent Pharma. That is in focus. This is also on the back of a brokerage note. Ekta is joining in with us to give us more details on this one. And what is JP Morgan saying? Ekta, good morning.
Well, yes, I am looking at Torrent Pharma. You know, JP Morgan has written a report on Torrent Pharma. They've upgraded the stock to overweight with a target price of 3,800. For the India business, strong growth momentum is expected to sustain. Brazil business, improved visibility, a low base is expected to support. When it comes to the GLP-1 opportunity, the potential to capture more than the fair share in India due to leadership in cardio-metabolic care could help. They could add around 100 to 200 basis points in annual growth. Brazil may benefit post mid-2026, not in the initial generic wave. In terms of financials, it's amongst the strongest cash flow generators in the sector. It's on track to be debt-free by FY27. Valuations are reasonable according to them.
Indeed. Ekta, thank you for that. An upgrade coming in for Torrent Pharma in a sector that is still poised for some impending tariffs from the Trump administration anytime now. 33.10. Torrent Pharma hasn't done much over the last 1 month, but still doing well for itself.
Almost any time now, but every day is a new story, right? Today we know that maybe it could extend in terms of the deadline as well. So that's also a possibility. You never know what's happening there.
You never know what's happening there, of course. And as long as it keeps the sector in the pink of health, well, nothing like it. Mitesh Thakkar joins in for a quick chart check this morning. Mitesh, good morning. Welcome back. And what's your call on the index now? We're taking a bit of a pause here as of now at 25,600. Do you see after the move that we had yesterday, there are enough legs to go to 25,700, 25,800? Or do you see a bit of consolidation at these levels? And of course, your stock recommendations.
So I think, good morning, we can test this 25,700, 750 zone. That's where a falling gap is. If you recall the way the markets fell back in September of 24, we got a big gap down around these levels of 25,750 to about 25,620. And I think that's the range which the markets might find difficult to cross. We are hitting close to that. So if somebody has long position, these are good levels to take profits on the index. Though on the stock side, a lot of stocks are breaking out, so I expect positive momentum over there. But between this 25,650, 750 range is, I would at least want to lighten up positions and then see if I get a dip to buy into it again.
Okay. And Mitesh, what are your top bets?
On the stock side, I think Asian Paints is breaking out today, big, strong volume candle as well as price action. So buy here with a stop just below levels of 2300 and 2390 can be looked at. And the other one, which I have is a buy on Apollo Hospitals with a stop below levels of 7120 for targets of 7280.
Buy recommendation on Asian Paints is a sector that has been in action today. Mitesh, thank you for your views on the index and for sharing your top ideas as well. Take a short break, but just before we do that, remember to tune in to the all-new CNBC-TV18 Prime. We're bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at noon for the Global Reset, at 1 p.m. for the Big C, and the Global Lens at 8:30 in the evening.
Welcome back to Trading Hour on CNBC TV18. We have the mid and small cap also that is managing to do well and holding on to strong gains in today's trading session. Some of the names that I want to talk about on the back of news flow there in focus. We have Mahindra Lifespaces. They've bagged a redevelopment project today, and this is in Mulund, and the gross development value is of around 1,250 crores. Though it's come off the day's highest point, look at it. It opened up in the green, strong gains, and then that one has come off. On the other hand, we have Hitachi Energy. That's also in focus. They have bagged an order to supply 30 units of 765 kilowatt of transformers from Power Grid Corp. On the back of this, we're seeing that the stock is buzzing in trade as of now, holding on to gains of almost 3%. Powermech is another one that's in focus as well, and this is also they are going to be setting up some grid-connected solar powers, and this is a PPA project with this is in Bihar. 25-year revenue is going to be of around 159 crores, smaller one, but Powermech is managing to hold on to gains of 4%. In the last few minutes, we've seen the further spike up coming in, and 4% gain trading at the day's highest point is what Powermech is doing. A lot of these broader end of the names are also buzzing in trade today. So when you look at the mid cap, you have something like IGL that's buzzing, we have HPCL that's buzzing in trade, as well as Dixon Technologies, obviously, like we spoke about before, on the back of a brokerage note. But to understand what's happening on the market fundamental front, we have Aniruddha Sarkar from Quest Investment Advisors, who is joining in with us to discuss just that, his top sectoral bets, what is he watching out for. Mr. Sarkar, good morning. Thank you so much for joining in with us. What are we watching out for? This week has been really good in terms of markets, so finally seeming that maybe some bit of a valuation correction would come in. That doesn't seem to be playing out. India has been quite resilient, at least this week. Now, in terms of valuation, what are you watching out for? What are the sectors? What is your outlook in terms of the market?
Yeah, hi, good morning. So I think, as you rightly mentioned, I think, definitely India has been extremely strong if you compare it to the rest of the world. But within that, I think what is helping to keep the markets up, or I would say what is helping the stocks to do well, is the pure fact that earnings are coming back. And that has been something which has been a big concern for our markets for the last couple of months, or rather, I would say for the last 6 to 9 months. Earnings was the big, I would say, the negative surprise, which kept the markets low. And after making a high in the month of September and October, I think, we are yet to go back to the old highs, but the way the markets and the earnings are shaping up, and thankfully with the way the international macros are shaping up, I won't be surprised if, investors are in for a positive upside.
Anirudh, good morning. Thank you for joining in. Now that we are at the cusp of another earnings season in just a few days from now, what are the pockets that you are watching out for that can spring up a positive earnings surprise this time around? Because for a lot of these experts that we speak to, they mention that the earnings recovery is still a couple of quarters away. But do you believe that this quarter will see some positive surprises?
Absolutely. Like, if you see the last quarter, after almost I would say 6 months, for the first time, we saw a good amount of earnings upgrades in different companies in the last quarter. As we begin FY26 with, from next month, we will have the first quarter FY26 numbers coming in. I believe that you should see some more earnings upgrades for good companies where I would say investors should keep an eye on. Now, having said that, a market is always going to reward before the actual numbers come in. And to some extent, you are seeing some of those price actions also happening in different companies. And this is partly because of the numbers which are coming. You can say the business updates or the IIT data or the macro data. Now, if you talk about sectors where I believe the biggest positive surprise can come, you have a very good indication in the capex numbers. Now, if you see the whole of last year, FY25, the big concern was capex was a big drag. Partly you can blame it to elections, and partly you can blame it to the base effect of FY24. Capex for the private capex, for the first time, the private capex has been more than the public capex in FY25. And this I'm talking about in absolute numbers. In percentage terms, yes, public capex has outperformed the private capex, but in absolute terms, the private capex has done better than the public capex. Now, this is going to get translated to all these companies who are supplying to all these companies where the capex has been happening. So I'm very bullish on the whole industrials and capex piece as a whole. Within that, power sector is one big focus area for me because government capex and private capex is almost at all-time high in this particular area. As of yesterday, if you see, there were a couple of news items also with regard to different companies supplying their products to the government agencies. I think this is something which is a multi-year play.
Okay.
Apart from that, I would say something which continues to do well is your aviation and hotels. Again, the other play which continues to do well is your capital market play, and that's a very big opportunity across different sectors.
And this is capital market despite it running up so much as well. You still think there's value?
Absolutely. I think, the stocks have done well partly because the opportunity size is huge. Now, the thing is, India was always an underpenetrated market when it comes to, equity as a asset class. That has changed post-COVID. We have seen those massive numbers of demat accounts, mutual fund folios, etc., which has opened. But I think if India's disposable income, household income, and per capita income has to grow, there is no way but to see more and more household money coming into the equity market. And that is where your capital market plays across asset management companies, exchanges, platforms, wealth management, broking. All these will do exceptionally well from here on also.
Right. Also, what's your thought coming in specifically on the PSU side, PSU banks? I want to understand that, right? Because we've heard a lot of people say that, maybe now this is where we could see a bit of a run up. So if you had to pick between the financials or the banking side, would it be PSU banks, private banks? What are you watching out for?
It's a very old debate keeps happening, what to buy, private or PSU banks. I would say in the last 4 or 5 years, I have been more biased towards the PSU banks because that is where the value mismatch compared to the private banks was very high. But having said that, I would say that as of today, I'm balanced between the two, wherein PSU and private both can do well. But yes, if you ask me from a valuation gap, definitely PSUs continue to look attractive even as we stand today. Private banks, I think a lot of catch-up has happened in the last 1 year, and that's where private banks have outperformed the PSU banks in the last 1 year. So from valuation perspective, PSU banks looks much better, but from a growth perspective, I think private banks might do better than the PSUs.
Private banks might do better than the PSUs. Anirudh, I was just going through one of the previous conversations that you had with us back in September of last year, just before the market had hit a record high. And you mentioned a couple of names as well. One space that you had mentioned about pharma, about 6 to 7% exposure that you had back in September to the pharma sector. And you had mentioned that you would increase your exposure to this sector. With the impending news developments with regards to tariffs or a potential delay, have you increased your exposure, and if you have maintained that increase, more importantly, and what is the road ahead that you see for the pharma sector considering the news developments lined up?
Broadly, I've maintained my exposure at the current level, which you mentioned. 6 to 7% is what I continue to have. We were evaluating different names out there, but I think, we replaced a couple of names by maintaining the exposure. Now, the fact for that has been the reasons which you mentioned, that there has been a lot of the news flow around how the Indian pharma companies will get impacted with what is happening on the tariff front. But having said that, I would say that the way it looks today, I think Indian companies are in a much better place compared to their counterparts in Southeast Asia, wherein Mr. Trump wants to reduce the healthcare cost in the US and at the same time wants to decrease dependence on Southeast Asia. So that is where I would say Indian companies definitely will benefit. But yes, the roadmap is not yet clear. And I'm, as of today, betting more on the domestic companies, companies which are domestic plays in India.
Okay. what's changed in terms of your view for the IT sector, right? That time we spoke, IT still looked decent. Now, you seem to be a bit more underweight on the IT pack. So I'm just trying to understand why so. What is it that has changed for the IT companies?
So IT sector, I think, I have been maintaining my underweight stance for a long time. And to be honest, the confidence is not coming when you look at the numbers, when you look at the commentary, or when you look at the deal pipelines. Simple fact that when there's so much of uncertainty on the home ground for the US and the European companies, how their companies' earnings will get impacted, whether there will be a recession, there are talks of AI impacting the jobs. In fact, if you look at the jobs data in the US, that is quite alarming. So I would say that, all this is definitely giving a lot of concerns for Indian tech companies that, where the growth will shape up moving ahead. Having said that, valuation is something which looks attractive on the IT companies, but only concern is that growth needs to pick up. Pipeline needs to look much better. Until that happens, I would remain underweight on IT.
Remain underweight on IT. Of course, they'll be the ones that will start reporting results first up. One final question from my end, Anirudh. The other one is autos, right? There have been plenty of chatter around it with regards to the tariffs here as well. Now, as a looming tariff deadline, of course, there is a bit of sluggish demand trends that you're witnessing back home as well with passenger vehicles, the entry-level cars still struggling, the two-wheelers also being neither here nor there. Where in the auto sector does your preference lie? Within the four-wheelers, the two-wheelers, the tractors, commercial vehicles? Where is your preference?
So we are betting more on the two-wheeler side and the auto ancillary side, because the auto ancillary side, it actually opens up the opportunities for export. And I think that is where India can become a large export hub. Because as I again mentioned, that if dependence on Southeast Asia has to go down, you need a replacement. And India, with its large auto ecosystem, is definitely one of those players who can take that position. Having said that, in the OEMs, I'm betting on the two-wheeler space, because that is where you will see a bigger opportunity, considering the tax benefits which will go into the hands of the middle class. And this is the category which typically goes into buying of the two-wheelers. And on the auto end side, I'm betting on companies which are into the export side.
Okay. Anirudh, thank you so much for joining in with us today and giving us an understanding in terms of your individual stock sectors that you're looking at, as well as in terms of the market as well. Thank you so much for tuning in. On that note, we're actually going to slip into a very short break. After the break, we'll talk about a couple of more names that are on focus today, Tata Power as well as Dixon Tech. Why are they buzzing? What's the reason? After the short break. Welcome back to Trading Hour on CNBC-TV18. Nifty is where it is, 25,600, about that mark. But let's shift focus and get to a CNBC-TV18 exclusive. And for that, we have Ritu Singh joining in with us. Ritu, you're picking up some details coming in on the IndusInd Bank succession. What are these details? What are we watching out for now over here?
Well, for IndusInd Bank, the big question has been who takes over as the next CEO to clean up the books, to restore confidence and steer the bank back on track. Now, the Reserve Bank of India, if you remember, had asked the bank's board to submit a list of potential candidates by the end of June. And now our sources tell us that 3 serious contenders have emerged. The first is, as widely speculated, Rajiv Anand of Axis Bank. He has about 35 years of experience in the financial services field. He's been with Axis Bank since 2009, the group rather, and on the bank's board since 2013. And in his last position as DMD, he oversaw the wholesale banking and the digital banking functions. He has a background in capital markets, mutual funds and treasury as well, and is overall seen as a very strong contender. The second is Anup Saha from Bajaj Finance. Remember, he also comes with more than 3 decades of experience, 25 in financial services, 14 years at ICICI Bank before he joined Bajaj Finance in 2017, and only very recently was he elevated to the managing director position. He's also led businesses across credit cards, mortgages, auto loans, structured finance, and so on. The third candidate, according to our sources, is Rahul Shukla of HDFC Bank. Again, he comes with more than 30 years of experience. He was with Citibank earlier and joined HDFC Bank in 2018 and oversees a corporate book. And of course, in his last position, he took over as HDFC Bank's commercial and rural banking head, but is currently on a sabbatical from the bank. Now, while all three are seen as contenders, our sources indicate, Rajiv Anand and Anup Saha are being looked at very keenly by the board. We also understand that while IndusInd Bank board has held informal discussions with the Reserve Bank of India about these potential candidate names, it is yet to formally submit that list to the RBI. Now, typically, RBI takes anywhere between 4 to 8 weeks, sometimes even longer, to approve the bank CEO names. But in this case, our sources suggest that the regulator may fast-track the approval simply given the extraordinary circumstances at IndusInd Bank, where, we've seen a spate of top-level exits. There is a leadership vacuum following a series of accounting lapses that came to light.
Well, along with Ritu, the street is also keeping a very close eye on the developments at IndusInd Bank. As just Ritu broke the story, the stock has now surged to the highest point of the day, 3.5% higher on that stock, building onto those gains after Ritu's news break. Ritu, thanks a lot for that update. The other one that's doing well today, slightly off the highs though, is Dixon Technologies, and that is after a bullish note coming in from Nomura. Remember, yesterday there was a bearish note from Phillip Capital. On the flip side now, Nomura has come out with a bullish note along with its highest price target as well. Upasana is here with more details on this. Upasana.
In technologies, it is clearly a story of two tales. Earlier this week, Phillip Capital had given a sell rating with a target price of nearly around 9,000 per share, and today Nomura has given a buy rating with the target price of as high as 21,500. Now let us see what the brokerage is saying. It believes that the EMS industry is likely to be divided amongst players, and Dixon continues to command largest share here. In terms of ODM partnerships and customer stake like Vivo and Transsion, this elevates the risk of customers shifting out, and even companies' backward integration will drive customer stickiness, is what the brokerage believes. Now, Dixon has been ahead of peers in adding more customers, and this offsets the risk of weak demand from any single customer, is what they believe. Now, in the near term, Dixon's export sales have seen a meaningful uptick, and brokerage believes that this ramp up is likely to make the company's overall export revenue on track for this year. Now, Dixon's largest client, Motorola, revenue monthly run-up rate has already exceeded the past peak, and it believes with this, the volume ramp-up, it is expecting around 11 million in FY25, and it can go as high as 16 million to 18 million in FY26 and FY27. Overall, it maintains the estimates of 45 units for smartphones in FY26, and it believes that the ramp-up in mobile volumes and approval of various new partnerships is likely to drive the stock forward in the upcoming session. So it has given overall maintained a buy rating with a target price of 21,500 on the share.
Okay, Upasana, thank you so much for that. Dixon Tech managing to hold on to gains of almost 2.3%. Let's move on to the next stock that's in focus, and that is Tata Power. And this is after it seeks electricity distribution license, I beg your pardon, in Maharashtra. Vivek is joining you with us to give us more details on this front. Vivek, good morning. What is happening here with Tata Power?
Well, this is very, very interesting. We flagged off something very similar a couple of days ago, and this was Torrent Power looking to enter a couple of key areas in Maharashtra. So last evening, Tata Power too has said that they're looking to enter the parallel electricity distribution sector in Maharashtra. Remember, some of the other players include, the Maharashtra State Discom itself, Torrent Power. So what have they done? They have applied to MERC, which is the Maharashtra Electricity Regulatory Commission, to operate parallel electricity distribution in 10 areas. So they will get a license, they will be able to go ahead and provide power. Now, what did Tata Power tell us? The total consumer base currently for Tata Power is at 12.8 million customers. This is across Mumbai, Odisha, as well as Ajmer. Now, in case they do get these 10 additional areas that they're talking about, they will be able to cross the 15 million consumer mark, making them the largest private distribution player in the country. Remember, Tata Power has a very strong track record of going ahead and improving the operations of Odisha, especially where they managed to reduce AT&C losses quite significantly. JM Financial earlier said that this now opens up a new avenue of growth as far as power companies are concerned.
Vivek, thank you for that. Just before we take that break, we'll pull up IndusInd Bank, moving further higher now, 4% higher now after Ritu's news break. So keep an eye out on IndusInd Bank. There you can see very sharp spike at the highest point of the day, 870 on the stock. Take a short break. We'll be back very soon on the other side with more on the market. Stay tuned. Welcome back. And IndusInd Bank was the big talking point. Ritu is still with us. Ritu, you mentioned about the fact that there are three names in the fray. But what is the risk of the bank missing that June 30 deadline? Is there a risk of any of these candidates getting rejected? What do we hear from that?
Well, Hormaz, we've seen past instances where such cases have happened, where the Reserve Bank of India has sent back the list of shortlisted candidates sent by bank boards for revision for newer names to be sent. But in this case, what I can tell you is that the board of IndusInd Bank has been engaged with the Reserve Bank of India officials on this very list that they are finalizing. So given the fact that the Reserve Bank of India officials are aware, of the kind of names that the bank is looking at, it is unlikely that this list, when it is finally sent to the RBI, it is yet to be sent. When it is sent to RBI, if it will get rejected completely, there are three candidates that will be sent in order of preference. The RBI, of course, will pick from one of them. But Hormaz, if there's one thing I've learned from reporting on the Reserve Bank of India for the last decade or more is this: never second guess the Reserve Bank of India. But for now, our sources indicate that the chances of this getting rejected is highly unlikely.
So never second guess the RBI. Of course, that's the bigger takeaway. Ritu, thanks a lot for that. We'll be on this story over the course of the day, and that has caused that reaction in the stock price as well. 4.5% higher now on IndusInd Bank, moving to the highest point of the day after Ritu's news break that three candidates are in the fray to be the next MD and CEO of IndusInd Bank. Remember, Nomura had recently upgraded the stock. They had also mentioned that the bank, with all the efforts that they are taking, is likely to start off FY26 on a clean slate, and this might just end up being yet another positive trigger for the stock. You take your leave on this edition of a Trading Hour. From Winnie, me and the team that put this show together, thank you so much for watching. Halftime report on the other side.